In today's video, I'm gonna break down my 6-step process for working with students and taking them from struggling and failing to becoming profitable traders in the stock market. Now, first things first, you want to understand that most likely you are going to be losing money. If you're watching this video, you probably are. And I want you to ask yourself this question. Are you prepared to spend 5 years trading and not make any money? Okay, I'm not saying it will take 5 years, but I want to make sure that you're coming in with the right mindset. Now, if you're losing money, step one is to stop the bleeding. I know it sounds simple, but stop trading. It's actually going to be very hard for you to do that because if you're losing, human instinct tells you to continue trading, continue placing trades, because that is the only way that you're going to make back what you're currently down. And believe me, we hate to lose, okay? It doesn't matter what type of person you are. I think everyone hates to lose. What is the solution to not lose? Well, stop trading. That is going to stop the bleeding. You're going to take a step back from the market. Step two is you're going to create a trading plan. Now, without going into too much detail on what my trading plan looks like, you essentially want to have a defined set of rules. Going into each trading day, you need to have those rules in front of you because it's going to be really hard for you to follow your trading plan. You're going to have emotion that's going to be tied to your trading more than likely, especially after losing a bunch of money. So make it very visual, have your plan in front of you or have those main rules to your plan in front of you. And one of mine is don't sell before 355, right? If you've seen my trading, you know that I essentially have algorithms that I've developed and all the trading I do is very systematic and almost automated, right? So it's to the point where almost a robot could do it. And there's virtually no emotion involved besides not sticking to my plan. As in, let's say, for example, neither my stop loss or take profit is hit. That means that I have to hold that trade until 355 exactly and close that trade at 355. So if I do that, that ensures that the equity curve, which obviously I can look at because I have 4 or 5 plus years of historical data over thousands of trades to back up that what I'm doing is and has been working over, like I said, the course of many years, and hopefully will continue to work into the future as long as I stick to my plan. And of course, I've still had instances where even though I have a system that revolves around a really systematic approach, I've still looked at a chart and I've seen that I'm getting close to my take profit. I might as well take profit. Or I'm sitting there at 350 and I'm trying to resist the urge to not close the trade, and I close the trade at 350 instead of 355, and then it ends up gapping up a couple minutes later. So that's one of the things that really has helped me is just having sticky notes and making it very visual. I have another rule where I have to wait 5 full 1-minute candle closes to essentially see if my stop has actually been broken or invalidated, because a lot of times the market does like to probe areas and shake out traders. So I want to see if it's an actual break of my stop or if that was just the market trying to take me out of the trade. And then kind of the last note that I have and look at every day, all day, is just don't take profit early, because the system only works if I let my winners run. Obviously, being able to mitigate our losses and cut our losers fast and let our winners run with a favorable risk reward and win rate. Well, that's how I'm going to achieve profitability overall in the long run, as that compounds over many trades, hundreds of trades throughout the year. So have that trading plan. It has to be very detailed. You need to know all of the outcomes and how you'd approach those outcomes and the answers to essentially everything that you will do in the market. Every button that you click, you need to know the scenario and what could happen in that situation. You really want to have a defined process in place. And I have built dozens of trading systems where I have failed to not only recognize, for one, that this system is way too complex and there's way too many variables that there's no way myself or any of my students could actually trade this. And two, that I, when showing up to the market, would actually be able to mentally sit there and execute that system. Whether that is because the drawdowns were so heavy or because there were 10 trades coming through at one given time and I couldn't enter them all at that given time. So it wouldn't have even been possible for me to have that back tested, outcome that we did see based off of that system. Build your plan, have rules in place. I'll talk about this more in the future. Now, the third step is once you've got that plan in place, it's not time to start trading, okay? It's not time to hop in a market and start trading with live capital, it is time to backtest that system. You're going to want to extensively backtest that system with as much data as you can possibly get access to. And I'm talking not days, not weeks, not months, not even years. Okay, maybe years, fine. 4 or 5 years I consider to be enough data, and it depends on obviously the frequency and volume of your trades, but you want hundreds if not thousands of trades over multiple years, all back tested, and you want to see that obviously your return would have been positive. Now, there's a lot that goes into what I look for in a trading system as far as drawdowns and risk adjusted returns to make sure that system is going to hold up and it's actually going to be a system that's worth me trading. So I have a trade that just came through on my software, and essentially what I've got to do is I have to enter that trade. So I'm going to hop in these RKLB calls. I am then going to open my algorithm. I'm going to enter the criteria obviously behind that order, which did just come through at 13.10. So obviously long, entry month 7, entry day 22, entry year 2025, entry hour 13, entry minute is going to be 10, and the entry price behind that order was 45.71. So I'm going to enter that. Got my essentially stop loss, take profit. So this trade has already been defined for me. I know where I'm right, I know where I'm wrong. I don't have to make any decisions on my own at this point. Now I just have to go ahead and buy those same contracts that my software did send through. So I'll go ahead and I'll pull up the same contracts, which were the August 1st 48 calls. So we'll open up the August 1st and we'll go to the 48 calls. I've got sellers at 170, buyers at 175. So I'm seeing a pretty wide spread here. I should be able to get a 168 fill, even though it looks like I could only get a 178 fill because I did just see someone come in and sell at 168. So we'll send that through. I got about 3,000 behind this position, which is going to be standard size. So I'm not trading dynamically. It's from a risk perspective. I'm trading fixed position size, treating all my trades the same. So I'm not going to put in more capital behind one trade than the other. They're all treated essentially equally behind this specific system. And ended up getting a 173 fill there. One thing I say is it's not worth sweating the entry. If you're sweating an entry, that probably means you're doubting that your system's going to make you money, or you're worried about not making money. And if the difference between, a 175 fill or a 168 fill, or 1 to 5% when you go to enter the position is going to make or break your year, then it's, in my opinion, not a system that I would want to trade. So get in the trade. You can see we're in the trade. I'll set my alerts. We'll set an alert here at or above. We'll set an alert here at or below. And now essentially I'm just going to wait for that trade to play out. I'm either going to make money or lose money. Who knows? That's one of 10 trades I've taken so far today. So once you've actually back tested your system, you've proven and validated that that is indeed going to be a profitable system moving forward, it's still not time to start trading with live capital. At that point, you want to start forward testing, and forward testing with paper capital, which is just fake simulated capital. Most brokers allow or offer that feature where you can essentially trade in a live market scenario without trading with real money. Okay, so you're gonna start forward testing that system, and you're gonna do this because there's a lot that can go wrong in the back test. And so to keep things simple, you wanna forward test that data, and you don't wanna do it with real capital because it might not actually produce returns. If you're wondering how long, ideally, at a minimum, you'd wanna take anywhere between 300 to 500 trades. So just to recap, we're gonna stop the bleeding, you're gonna stop trading, you're gonna create a trading plan, you're gonna set defined rules, you're gonna put some sticky notes on your desk. You're then going to back test that system with those rules. Once you have a positive back test, you're gonna take that, you're gonna forward test it, you're gonna trade on a fake simulated account using not real money. And then at that point, after collecting enough data over enough months, preferably a couple hundred trades, then you should have the confidence to start trading with live capital. But here's where I made a mistake in the past. You're not gonna size up and size in and trade with the same amount of capital that you probably want to, right? Because at this point, you haven't made money yet. You spent a lot of time in these fake environments of backtesting and simulating, and now you're like looking at the money you could have made and you want to go in. You want to go in heavy. You want to start trading big size. And that's the worst thing you could do, because there could still be issues that you haven't foreseen, or scenarios that you haven't gone through, or market conditions that your system is just not prepared to hold up against. And I think the biggest pro to that is more just from a psychological perspective, right? You should not be tied to the P&L, the profit or loss, how much you're up or down. You should purely be sitting there. Yes, you're trading with live capital, but it is just a small incremental amount. It's 1, maybe 2 option contracts, ideally just 1 option contract. So trade that really small, again, because you want to look at things from the perspective of strategy, of execution, of trade management, and following your plan without actually letting the dollar amount you're up or down affect you and those decisions, and essentially lead you to not following your plan. If you don't follow your plan, then everything goes out the window, right? And once you've done that successfully, again, for similar time and amount of trades by volume, well, then start sizing up. And size up to where you can emotionally deal with that size without being and becoming, emotional to the capital and whatever money you have tied into the market and those trades. So size in. Now you're making money with a small amount. You can increase that size a bit over time. If you want to increase the expectancy that you will actually make this happen in less than 5 years. I get it. It's a lot. It's intimidating. I've spent millions of dollars and many years with a huge team behind me to build profitable trading systems. I will put a link in the description below. You can head over to my website and check that out. Subscribe for more, and I will see you in the next video.